Big week, of course, for tech earnings. What are you and the team looking at?
Yeah, I think we look very closely at the chip makers, not just here in North America, but Samsung reports Tuesday, right? And, you know, basically the industry's got it wrong on memory chips. A year ago, we were saying that the boom-bust cycles are over, that actually we'll have better management of our inventories, better management of how we're managing supply, and that's not been the case. There are factories and warehouses with backlogs of inventory, and so customers have stopped ordering. We've already had a profit warning from Samsung. Then the US chip makers report after that, so that will be interesting. And then there's the calendar, right? Mega Cap Tech Week. It all kicks off Tuesday, really, but that single day in the week where you get Alphabet, Amazon, and Apple is going to be a pretty unfortunate and unhappy week for me, I imagine.
No, what are you talking about? You're totally going to love it. Going into this, what has sentiment been like?
Well, mixed, because before all the job cuts announcements across the tech companies, we were worried about the earnings risk, right? Earnings on an EPS basis should drop around 8% on tech broadly. Some of it cases it's deeper, like Meta EPS drop is in the 30 to 40% range based on consensus. So the question is, like, how glum is the outlook? Microsoft gave a pretty weak outlook, which made us a bit worried, even though that they had outperformed in the quarter just gone. There is sort of some worry out there about corporate demand, for example. But there's this other school of thought, right, that the job cuts now are very good, because if you're a long-term investor, you say cutting now is painful, but it actually boosts the opportunity to grow earnings on the other side once we're through a recession. And I think that's what the narrative will be this week.